Annette, as you rightfully say, 2024 was a difficult environment for the chemical industry, but BASF has performed very well in this environment, and we're looking also with confidence into 2025. However, we're not expecting a lot of tailwind from most of our markets and most of our regional markets. So overall, we focus very much on what we can control, but this gives us also a lot of confidence because we have a lot of things that we have in terms of strategy implementation ahead of us. So we approach this year 2025 with quite some optimism.
You're restructuring the company. You're making it much leaner, right? This is the way forward. So what next steps can we expect?
Well, first of all, we're focusing very much on implementing our winning way strategy now in 2025. And this includes a strong refocusing of our portfolio. So we are focusing on our core businesses, and we are looking for value creating pathways for our standalone businesses. And that's going to be a priority for us going forward. Within the core businesses, we are continuing to restructure also the company and focus very much on increasing our competitiveness, especially here in Europe, where market conditions are particularly challenging. And we are, of course, focusing on ramping up our new integrated Verbund site, as we call it, in China, which is going to be a key milestone for the company, starting this plant up in 2025.
Let's talk a little bit about China. That has been hugely controversial, your big investment in the country. So how do you fend yourself, and when will China positively contribute to earnings?
Well, overall, BASF has a long history in China, and we have a great track record over the last decades of significantly growing our profits and business and structures in China. So we know what we are talking about. In the chemical industry, China is a dominant market. Already today, half the global market is China. And if you look over the next years until 2035, China will contribute more than 70% of the total market growth in chemicals. So China is the place to be when you want to grow. However, you have to be competitive because China has become a much more competitive place. And with our investment in China, we're bringing leading technologies and leading cost structures with our assets also to China. So this is why we believe that this investment will come into a very difficult time in China, because right now the market environment is not as favorable as we thought some years ago, but we have a very competitive plant in the highest growth market in chemicals in the world.
But in other words, the gold rush is over in China. So is it also that profitability is not as high as before going forward? And on top of that, when do you think will the market recover?
Well, we overall have seen now a few years of growth in China that has been below expectations, both in chemicals as well as in overall industrial activity. So in my words, always we have to look at a China that's a bit more normalizing now, and it's becoming more cyclical, and it's becoming a little bit more stop and go, like we have seen in Western markets in Europe and in North America as well over the last decade. So China is no longer a market where every year you can bank on significant growth and it's almost on autopilot. So it will become a bit more normal. We will see cyclicality of investment waves, but then also again periods where products will be short and investments will go down. And right now we are in a wave of investments, so overcapacities in China are a significant challenge for the chemical industry. But we believe that towards the end of the decade, this will also normalize in most of the value chains.
Is India the next country which might be on autopilot?
I'm not so sure that India will ever be on autopilot, but I'm a big supporter of the camp that really sees India as the next big thing. And I believe India will be the next big thing for the chemical industry because of its strong focus on increasing the manufacturing sector in India, producing really high value goods in India. And that's typically a good environment for the chemical industry. And I think the political stability of having a policy framework that really supports this trend now for at least another 5 years these are all beneficial framework conditions, I think, for India. And then, of course, the demographics and the rise of Indian middle income is a tremendous opportunity. So I believe, yes, India is the next big thing in chemicals.
Let me bring you back a little bit to this whole geopolitical mix and the tariffs announced or not announced. So it's a back and forth on that. How do you navigate through that, and what will be the impact on your business?
Well, first of all, BASF starts in a very favorable position compared to many other companies, and especially also chemical companies, because for decades we've had the philosophy of putting our manufacturing assets in the regions where our customers are. We are by any measure, either the biggest or the second biggest chemical company in the US. So we have a significant footprint also in the US and competitive assets to serve our customers there. So we are not as affected by international trade flows directly as BASF, as many other chemical companies are, whose business model is rather to export from one place in the world to the rest. It is, however, for us, impacting potentially our customer industries. But here, given our global footprint and the fact that we are serving our customers typically also in all regions of the world, we are also less impacted than others. But the insecurity around trade policies and tariffs is certainly not helping overall industrial growth and overall GDP growth. So we hope that overall this clarity that is needed will be coming quickly to us, so we can actually move forward and adapt our tactics and strategies.
The jury is out what it all means for the US economy. Currently, it's still going very strong. So what's your assessment? And perhaps you have some early indication for us whether they keep on investing or they're also holding back.
Well, right now, I think it's still early days with the new administration coming in. What you sense when I talk to customers and peers is a sense of optimism when it comes to a near-term economic development, 25, 26 in the US. Also industrial activities seen more positively than maybe 6 or 9 months ago. However, we're not seeing it in the numbers yet. Our projections for example, the chemical market growth in the US for 2025 is still more or less a flat market. So we're not expecting now a short-term fireworks when it comes to industrial production and chemical demand. But we certainly are ready for upsides.
Let me bring you back to the continent, to Europe, and especially Germany. So we have a new government, not yet, but we had the vote. So what do you want from them? What needs to change?
Yeah, that's right. We will hopefully have a new government soon. I mean, the good news is that, first of all, I think it was good that Germany had a very high participation in this election. The second thing is it's a good constellation from my perspective that we have the opportunity of forming a two-party coalition government. It is an opportunity to come much quicker to the necessary decisions than, for example, a 3- or 4-party coalition where things would be much more difficult. So it's a big opportunity now for Germany. The new government should get into action really fast, because there's no time to waste here in Europe to get the economy and especially industry back on track. And my wish, besides all the content-related priorities that are, I think, clear to everybody when it comes to regulation, energy markets, but also infrastructure investments, is that the government really focuses on the key priorities and gets into action quickly, but also decisively, and not just looking for small tweaks here and there, but really sets a new course for Europe. Because also this will bring back confidence in investors, it will bring back confidence in companies, and that is urgently needed also to kickstart growth in Germany and in Europe again.
Yeah, the prime example of needing lower energy prices, I guess, because you need a lot of energy for your production processes. So how do you feel about the competitiveness in Germany because of these high energy prices?
Yeah, that's right. I mean, our energy dependence as a chemical industry is high. We have high energy inputs that we have to deal with. However, you have to look at this also a little bit differentiated, because there are certain parts of energy competitiveness that will not change short term. For example, Europe is not a natural gas producing region. And so we will always have potentially higher gas prices than, for example, the US Gulf Coast or the Middle East. So some things are structural. But on top of that, there's, of course, a lot of influencing factors that are determined by regulations and the policy environment. And here's, I think, where Europe can make a change. So to some extent, the chemical industry will have to live with some offsets when it comes to energy cost. And we are adapting value chains. And I think we have overall a very, very good setup in Europe that can deal with these offsets. But where we are asking for a better direction in Europe is really the self-made, let's say, difficulties when it comes to energy policies and additional tariffs and levies, where I think politics can help industry in Europe and also the chemical industry to become much more competitive.
One last word on your dividend policy, because you have cut ties with a long-standing tradition that dividends are either stable or rising at BASF. Is that something which will now be there forever, so it will be a volatile dividend environment, or is that a one-off?
Well, first of all, I'm always hesitating to give any projections forever. So we have given now in our strategy a projection for the next 4 years. And we have reset the dividend, but also implemented the strong commitment to share buybacks, which we will introduce into our shareholder distribution strategy as of 2027. And I think in this combination, we are committed to a very attractive shareholder distribution of 12 billion euros over the next 4 years. And that's on the same level that we also saw in prior years. So we have just shifted, if you want, from a dividend only to a mix of dividend and share buybacks. And the resetting the dividend now really allows us to have more flexibility in times of high capital expenditures, also to do the right things for the company.